Welcome to Wealth Signal, your #1 source for high-impact insights into global finance, major economic shifts, and smart wealth-building strategies for the future. There's a quiet crisis unfolding in real time, and it's going to reshape the future of the global economy. The U.S. is trapped in a debt spiral. Today, we're breaking down why America's debt is no longer sustainable, how interest payments are becoming the biggest threat to the economy, what this means for inflation, taxes, and your financial future, and how to position yourself for what's coming. Let's dive in. The numbers don't lie. Of this year, the U.S. national debt has surpassed $34 trillion, and it's growing by over $1 trillion every 100 days. But here's where it gets scary. Interest payments on that debt are now over $1 trillion annually, more than we spend on defense or Medicare. This means the U.S. government is spending more just to pay the interest on its loans than on most major programs. It's not a debt problem, it's a debt servicing problem. Why is this happening now? 1. Rising interest rates. After years of near zero rates, the Fed's aggressive rate hikes have caused borrowing costs to spike. Much of America's debt is short-term, meaning it must be refinanced regularly, now at higher rates. 2. Endless deficit spending. From stimulus packages to military budgets to entitlement programs, the U.S. is running massive deficits with no signs of slowing. 3. Shrinking tax base. With slowing growth, rising unemployment, and more companies moving offshore, tax revenue isn't keeping up with spending. 4. Demographic pressure and aging population means higher Social Security and Medicare costs, and fewer working-age people paying into the system. The debt spiral explained. Here's how a debt spiral works. Government spends more than it earns, issues debt, interest on that debt rises, needs to issue more debt just to cover interest. Rising interest crowds out spending. Taxes must rise or services must be cut. Market loses confidence. Interest rates spike further. This is what economists call a fiscal doom loop. It's not about defaulting, it's about drowning in interest. What happens if the spiral continues? If nothing changes, here's what we could see. Massive tax hikes to service debt interest, inflationary printing to monetize the debt bond market instability as investors demand higher yields, cuts to social programs and entitlements, weakened dollar and rising cost of living. And if the Fed tries to lower rates to slow the spiral, it risks igniting more inflation, a no-win scenario. This isn't a theoretical issue. It's already happening. Why this matters to you? Most people think this is a political problem. It's not. It's a structural flaw in how the U.S. has financed its growth for decades, and now the math doesn't work. If you're not preparing now, your savings, income, and investments could get crushed by the consequences. How to prepare: reduce exposure to dollar risk. The dollar may remain dominant, but it's losing purchasing power. Hedge with gold and silver, real estate, foreign-denominated assets. Watch the bond market. 10-year Treasury yields are a key signal. Rising yields equal rising risk. Prioritize cash flow over capital. Gains in an unstable environment. Consistent income matters more than paper wealth. Plan for higher taxes. Future tax hikes are almost inevitable. Use retirement accounts, trusts, and corporate structures wisely. Stay agile and informed. This isn't a doom scenario, it's a transformation. Those who adapt can thrive. Final thoughts: America's debt trap isn't just a chart, it's a time bomb, one that's ticking louder every month. But with the right strategy, you can avoid the fallout and position yourself to build real, resilient wealth. Subscribe to Wealth Signal, where we decode the future of money one signal at a time.